Hi, welcome to my channel. Thank you for watching. Here's a little bit about me. My household consists of myself, my husband, and my toddler. My mom also lives with us, but she's not included in our finances. We live in a high cost of living city in the Northeast. My husband and I both went to graduate school, but fortunately, we no longer have student loan debt. I work in banking and he works in aviation. I take care of the family's finances and I love my role as the self-appointed CFO. I love to talk about all things money, whether it's investing, saving, or making money. I look forward to sharing a wealth building journey with you. I look forward to getting to know you, and I hope you enjoyed this video. After revamping my finances in the spring of 2021, I decided that it would be good to make a video about my experience with Merrill guided investing. So in 2013, I quit my job and went to go work somewhere else. When I did that, I decided that I did not want to leave my funds behind and I did not want to keep them with my previous employer. I decided to roll them over into an IRA where I would have more control over my investments and I would keep everything in one place. Since my main bank is Bank of America, it made a lot of sense for me to go with Merrill. Also, I already had a brokerage account there. During a routine visit to a branch, I got a sales pitch. After talking to the person, I scheduled a call with an advisor who touted the preferred rewards discount and also emphasized the value of set it and forget it. They billed themselves as having discounted fees. If you are a gold customer, you get 0.05%. If you are a platinum customer, you get 0.1%. And if you are a platinum honors customer, you get 0.15%. That sounds really good, except that the fee is 0.85%. That is very expensive. In the first year, I paid little to no attention to my account. I had a stress from adjusting to a new job and there was a very steep learning curve. I also felt comfortable enough as a result of my conversations that I had during my annual call with my advisors. That first year, they told me the market was rough, but I was still on track to retire and I should not worry about anything. In the second year, I decided to start paying much more attention. The first thing that I noticed was that my performance wasn't very good. That was odd because even though the total market wasn't doing spectacular, it was at least positive. My returns for that year were negative. So that year, I voiced my concerns. I complained during my annual call with my advisor. He agreed to change my funds. I had a lot of BlackRock funds, which he got rid of, and ended up in a lot of Vanguard ETFs. I honestly do not remember exactly what the funds were. They could have been really high risk funds, or they could have been funds that had really high fees that were eating away at my returns, but I don't really recall. In years 3 through 8, performance improved. I was posting gains regularly, but I was not really closely monitoring it because of major life events. I bought a house and I moved. I finished graduate school. I got married. My dad battled cancer. I had a baby. There was a pandemic. So I had a lot of things going on in my life that prevented me from paying very close attention to my investment. But once my life settled a bit, I decided to compare my performance to that of the total market. And then I realized that the fees were absurd. I also realized that I was lagging the market by a lot. Everybody was talking about the historic market returns. And while again, I was posting gains, I was still underperforming. I was probably up 75%. The overall market, especially the US broad market, was up 100% plus. In fact, my 401k at my current job that I had full control over was performing better, and so was my husband. I manage both of these accounts. So I figured, what am I paying these people for when the accounts that I'm managing on my own are doing better than the accounts that they're managing on my behalf? Deep down, I knew I didn't really need a financial advisor. because my life is really not that complicated and I feel competent enough to handle my finances, it just felt good to say, I have a call with my financial advisor. I guess it made me feel important. That makes you feel like they have information that you don't. Then I realized that the 7.5% return that I had gotten over time was more of a matter of rising tides lifting all boats, not because they were keeping up with the market, and certainly not because they were beating the market. So I decided to contact them and end my relationship with them. I was asked if they could offer new services, new funds, better funds. I said, no, thank you. I mean, if you had those available, why didn't you offer them earlier? At that point, I was definitely all done with them. They terminated my relationship. I moved my funds from their managed account into a self-directed account, and I created a portfolio that was based on my risk tolerance. So that meant a certain percentage in the US total market and a certain percentage in the international market. I stayed away from mutual funds because I did not want to pay the high fees that are associated with buying a mutual fund that's not related to your brokerage account. So that means I went with ETFs. I think one of the things that lured me was the nature of set it and forget it. I assumed that the professionals knew better. I thought they would perform better, but clearly that wasn't the case. I was essentially paying them to perform worse. Now, it doesn't mean that there were no advantages. For starters, I didn't panic sell because I couldn't. They controlled the account, meaning that I couldn't trade or do anything with it without picking up the phone and calling them. The fact that there was an obstacle, even if it wasn't unsurmountable, kept me from doing something stupid like pulling out when the market hit the bottom. I also didn't miss out on gains by staying on the sidelines thinking that I'm going to wait for the dip. I also didn't miss out on gains by staying on the sidelines thinking that I am going to wait for the dip. A dip that never came or a dip that didn't last long enough. But I think one of the most important benefits that I got out of this is that I didn't lose my shirt in meme stock trading. FOMO is real. And I could have been tempted, but I wasn't because I had no access. They do offer good customer service. They are very polite. And if you are a Platinum Honors client, there are some decent perks. However, I don't think any of those are worth the potential of missing out on very good market returns, paying really high fees for somebody who's not going to do better than you could have done yourself. For someone who has little self-control or somebody who doesn't trust themselves, this might be something that works out for you. However, if you're confident enough to take care of your finances on your own, it is definitely not worth it. I'd like to hear from you. What is your experience with Merrill guided investing or really any other type of investment advisor? Have you considered one? Have you had one? Leave me a note in the comment section and let me know what your experience is and what your opinions are of these types of services. I would like to continue sharing my thoughts on all things money with you. So I would appreciate it if you could help out the channel by liking this video and sharing it with anyone you think might benefit from it. If you want to see more content, be sure to subscribe and hit that notification bell so you can know when new videos come out. I'll see you in the next one.